Vietnamese Dong sparks global shockwaves, a new era in currency revaluation. Hi everyone and welcome back to IQD to VND. If you're new here, don't forget to subscribe. We're aiming to reach 400 subscribers by the end of April, and with your support, we'll get there. Today, we're bringing you an urgent update about something extraordinary that's just unfolded in the global financial markets. An event that's taken even the most experienced traders and analysts by surprise, unprecedented disruption in the currency markets. In the early hours around 2 a.m. GMT, major forex trading platforms around the world suddenly experienced simultaneous freezes. Initially shrugged off as random technical errors, the true cause quickly became evident: the Vietnamese Dong, VND. One leading forex broker was among the first to act, halting all VND transactions and citing what they called an unexpected liquidity event. Shortly after, any platform supporting VND/USD trading started experiencing outages, sending shockwaves through the forex community. Behind the scenes, an unfolding mystery. Internal communications between major financial institutions ignited almost instantly. Reports indicated a massive surge in VND trading volumes, with exchange rates spiking into previously unimaginable territories. Some institutional trading terminals began flashing exchange rates that financial experts had whispered about for years but never seen made public. Major banks were forced to lock down internal systems designed to detect abnormal trading activity. Automated security responses kicked in, leading to emergency recalibrations of exchange rate monitoring tool. Credible yet unofficial sources from institutional trading desks in Singapore and Frankfurt confirmed what many feared. Buy-side pressure on the Dong was exploding. Some speculated that coordinated institutional buying efforts were underway, with major players moving large volumes at strategic prices. Rising speculation and tight-lipped institutions. The situation escalated dramatically when internal memos from global banks began instructing their employees to refrain from public discussions about the Vietnamese Dong. This sudden wave of secrecy fueled even more speculation. Why now? What triggered it? Vietnam's economic trajectory has been steadily climbing. Despite operating under a tightly managed currency float, the country has kept inflation relatively low, maintained healthy foreign reserves, and attracted increasing foreign investment. Many experts have long argued that the Vietnamese Dong was significantly undervalued. Now, it seems, plans that had been quietly developed for years might finally be activating. Whispers of a secret revaluation strategy. According to leaks from individuals allegedly tied to Vietnam's Ministry of Finance, a multi-stage revaluation strategy has been in the works since early last year. This strategy reportedly involved secret bilateral meetings, adjustments to gold reserve disclosures, quiet coordination with major clearinghouses globally. The aim? To ensure that when a revaluation occurred, the world's financial system could absorb the shock without falling into chaos. Further rumors suggest that BRICS-aligned nations, who advocate moving away from US dollar dominance, were consulted during these secret preparations. Yet what exactly triggered the current movement remains unclear. Some speculate that it might have been a deliberate stress test leaked early. Others believe it could have been a premature activation of Phase 1 of Vietnam's strategy. Trading platforms. React, chaos and confusion. As the event unfolded, public forex platforms displayed wildly erratic VND exchange rates, ranging from 23,000 per USD down to 1,200, or even as low as 50 Vietnamese Dong per US dollar. Although many dismiss these shifts as technical errors, those familiar with the deep rumors surrounding Vietnam's currency recognize these figures. They aligned eerily well with old projections from private wealth management groups. Vietnamese banks, caught off guard, experienced overwhelming transaction requests. Some even reported system slowdowns. Despite the chaos, Vietnam's central bank has remained silent, avoiding public commentary. However, increased security at the bank's headquarters, including the arrival of unmarked vehicles, has been observed by journalists in Hanoi. To financial insiders, the signs are clear. Something historic may be happening behind closed doors. Analysts predict a two-phase rollout market. Analysts based in Tokyo and London are now discussing the possibility that Vietnam is rolling out a two-phase revaluation. Phase 1, quietly test the system at the institutional level, observing liquidity and stability. Phase 2, official public announcement with a controlled timeline to avoid retail panic. If the Vietnamese Dong's value moves even modestly, for instance, from 23,000 to just 50 cents per USD, the economic ramifications would be enormous. Vietnam's debt ratios, foreign investments, and regional currency rankings would all be radically altered. A full-scale revaluation could even rival the most significant monetary events of the last century. How this affects VND holders. For individual holders of Vietnamese Dong, this could be a pivotal moment, but caution is essential. Governments and banks may impose tight exchange windows, set capital controls, enforce compliance checks before allowing redemption. Already, many currency exchange services have temporarily suspended Dong transactions, suggesting new rates may already exist privately, just not yet announced to the public. Historically, when institutional systems go dark, it usually precedes major realignments. Prepare for what's coming. If you hold Vietnamese Dong, here's what you should do now. Ensure your Vietnamese Dong holdings are secure and verifiable. Consult reliable advisors about possible changes and implications. Be cautious of private exchange offers or non-public deals that may come with legal obligations. Stay alert for potential tax or reporting requirements once revaluation occurs. Some experts believe we could be seeing the early stages of a broader global financial reset, a theory long considered fringe, but now gaining new credibility. In this vision, national currencies would be reassessed based on real economic strength, natural resource backing, and global political alignment, moving the world away from a dollar-dominated model. And with the VND's stunning overnight developments, the first domino may have just fallen. Final thoughts. Whether you're a seasoned investor, a casual currency holder, or just someone curious about global economics, what's unfolding right now is unprecedented. For once, speculation, rumors, and institutional actions are all pointing in the same direction. And when that happens, history is often in the making. Stay calm, stay informed, stay ready. The next few days and weeks could bring either clarity or further surprises. Either way, the world is watching. If you found this information valuable, share it with others who need to stay informed. And don't forget to subscribe for ongoing updates as this remarkable story continues to unfold. This might just be the beginning.